Welcome, everybody. Thanks for joining today. My name is Sean Moss with Down Payment Resource. Today, we're going to talk about the basics of homebuyer assistance programs. So consider this a 101 sort of crash course, what every real estate agent needs to know about down payment assistance programs. My name is Sean Moss with Down Payment Resource. We also have with us in the background Melinda Harris, our marketing manager, and Fern White, our account manager. They're going to be handling Q&A, so keep this interactive. Enter your comments as we go. Use the questions pane if you can. It's a little easier to manage than the chat box. And throw us your questions, comments, success stories, and anything you want to share with us. We're going to cover today the basics of homebuyer programs. We're going to break down the most common types of homebuyer programs, especially down payment assistance. And we're going to talk about the commonalities among programs, the universal requirements, but we're going to break down some of the differences when we look at different kinds of homebuyer assistance. Now, at Down Payment Resource, a little bit about us. Our primary mission is to help you connect homebuyers, your clients, to the down payment help that they need. There are a lot of misperceptions out there among prospective homebuyers and renters, especially younger first-time homebuyers, about down payment requirements, low down payment programs, and the availability of down payment assistance. So we want to combat that, bring you the data, bring you the tools, bring you the information, bring you the ideas that you need to help connect those home buyers to the down payment solutions that they're going to need to overcome the biggest obstacle to home ownership, which is saving for the down payment. Now, we are a nationwide database of all of the home buyer programs around the country, about 2,400 of them. We track and monitor the benefits and repayment terms and eligibility guidelines and so forth of all of these programs. We integrate into MLS and property listing data, and we bring you data about these programs so that you can step in and provide solutions to the down payment obstacle for your clients and your prospects. Now, we are not integrated with every MLS. We will show you who those MLS partners are and some of the tools and benefits you get as a byproduct of those relationships. And we'll also show you a couple other tools that you can use, even if we haven't yet partnered with your MLS. So what are we talking about today? Down payment assistance, broadly speaking, but those can be loans, those can be grants, they can be deferred, they can be forgivable. We're going to get into that and break that down, but we're also talking about tax credits and affordable first mortgages and other programs for potential home buyers that can help them achieve their down payment faster, so explore home ownership sooner, cover closing costs, and potentially make more competitive offers or bids on properties because they don't need to cover closing costs through the seller, and ultimately get into a home sooner, or at least explore home ownership and opportunities with you sooner than perhaps they otherwise thought they could. So a big part of this is not just bringing you as real estate agents the tools and the data and the resources that you need to have these conversations, but to expose those opportunities to prospective home buyers so that they are aware that there are solutions out there for the down payment. They understand the full spectrum of opportunities available to them, and they can then react to your marketing. They can react to your messaging and start those conversations now rather than suffering from misperceptions about, I need 20% down. We know that's not true. You can buy a home with, 0, 3, 3.5%, 5% down. So we want to give you guys the tools and information and data to help overcome those obstacles, start more conversations, bring more prospective buyers into your pipeline, and get them exploring home ownership. Now, big picture, we're just going to look kind of nationwide here. Of those 2,300 some programs for home buyer help around the country, more than 3/4 of them are down payment or closing cost assistance. Now, again, we're going to break that down because those can come in many forms. We also track tax credits or mortgage credit certificates. We'll break those down too. That's one of the most common types of home buyer help, not available necessarily in every state or every market. But we also track affordable first mortgages, which typically come from state housing finance agencies or local housing finance agencies. And then some what we call outlier or other programs, matched savings programs, housing choice vouchers, down payment assistance from employers, tribal programs, and so forth. So big picture, the point is most of what we're talking about when we say home buyer assistance or DPA They are at closing, down payment help, closing cost help, and so forth. That can come in many forms. But as part of this webinar today, we are going to talk about mortgage credit certificates and affordable first mortgages and the benefits and the value that they offer and their availability and their requirements. Those are important factors or products or programs to consider when we're trying to help first-time home buyers and renters and the next generation of prospective buyers understand the opportunities and explore their opportunities. Now, we start there with a nationwide perspective because these programs are available across the country. Now, just to be clear, the map on the right here is showing you where some of the states are that have the most state and local programs. But every state has a state housing finance agency. Their programs are available statewide. Cities and counties and nonprofits all over the country have additional down payment and closing cost programs or other programs that layer in opportunity. So literally every market is covered. Every market in the country has some form of down payment or closing cost assistance available through a number of different kinds of housing agencies and entities, and we'll look at that in a second here. But it's important to remember, no matter what market you're in, no matter what state you're in, what city you serve, or what metro area you do your business in, there's down payment help there, okay? And we'll show you some tools to help you uncover those programs. Now, who offers these programs? And again, this is going to start out as sort of a crash course, kind of 101, and then we're going to break down some things. But these programs come from, as I mentioned, housing finance agencies. Every state has one. There are local housing finance agencies that also offer down payment assistance, closing cost help, affordable mortgages, and so forth in many markets all over the country. You've got cities and counties and other municipal entities that might have a community development department or something similar, economic development. They offer programs as well, often funded by HUD sources. You've got housing authorities. You've got nonprofits that may get money from HUD, from donations, from any number of sources. Employers might offer down payment assistance to attract or recruit or even retain their talent. And then you've got other outliers, community land trusts and others that offer some form of homebuyer assistance. What we do at Down Payment Resource is track and monitor all of those so that when you're exploring opportunities with a prospective buyer, all of that data is made available. All of those programs that are applicable to your client in that market where they want to purchase, they show up and you can explore all of those opportunities. Now, we do want to take a moment here and talk about kind of the state of down payment assistance. We've heard a lot of misperceptions over the last 6 months or so as we've all tried to navigate this COVID pandemic about down payment assistance going away. So I'm going to begin with the end in mind. That's flat out false. Down payment assistance programs have not gone away. They're alive and well. We'll break that down in a moment here. But we also track the impact of COVID-19 on down payment assistance and first-time home buyers and the affordable real estate and affordable lending. We offer, if you go to downpaymentresource.com, at the top right, there's a COVID-19 update link. And every week we put out an update, just sort of big picture, what's happening related to affordability, first-time home buyers, DPAs, and so forth when it comes to COVID-19. So breaking that down a little bit further, I already mentioned every state housing finance agency has remained open and accepting reservations all year. No, not one state housing finance agency or local housing finance agency shut down. Now, there have been some struggles, if you will, among cities and counties and nonprofits. In some markets, they've had to close down their doors and work remotely, and that wasn't always something that they were used to doing. That plus some market fluidity, which has mostly subsided, but the market, if you recall, March and April was pretty fluid. The Fed had to step in and kind of stabilize things. That impacted a lot of things in the DPA world from a pricing and product perspective, but it didn't shut down payment assistance programs. Now, of course, we know that homebuyer education is being done exclusively online. We don't know where the end of that will be and when the doors will open back up to in-person, on-site classroom events. But we're tracking that and monitoring that as well. We do know that all of the housing finance agencies And in large part, some of the cities and counties and local nonprofits that offer down payment assistance, they had to react to a flurry of DC policy changes out of, Fannie, Freddie, HUD, VA, and so forth. Things going on in DC that changed policy and changed their programs. They had to react quickly and adopt to that. And we know that early payment default and forbearance, you probably heard a lot about that in the last few months. Lenders especially are monitoring that as a hot topic and a potential pain point, but that's subsiding as well. So there was a lot going on, right? But let me just sort of wrap all that up in one simple phrase. DPA is alive and well. Down payment programs have not gone anywhere. That's the most important takeaway today. These programs are still widely available. There have been some small few that had to pause their program because of COVID, because they had to shut down municipal offices, work remotely, cancel in-person events, and so forth. But by and large, online homebuyer education and remote work adaptation has allowed a lot of these down payment assistance programs to continue operations and support their real estate and lender partners and ultimately the consumers. Now, stepping back a moment, let's look at where we were in January. So pre-COVID, when we think about down payment assistance programs, their availability, their viability, awareness of them, we always like to, in the last few months, harken back to this survey from clever.com, which in January published the results and asked of millennials and other generations, where did they plan to acquire their down payment for their next home or for their new home or their first home? And the second most popular answer, especially among millennials, was first-time homebuyer assistance programs. All of these programs we're talking about today. And that answer was second only to saving their own money for a down payment. So we'd expect that, right? But we've also known for a long time that the last person to find out about a down payment assistance program available in their market is the consumer, the prospective buyer. And they're only going to learn about that most often through a real estate agent or a loan officer who brings that opportunity up in conversation and explores that opportunity with that renter or with that prospective buyer. So when we think back to pre-COVID, awareness was on the rise. Awareness of down payment assistance programs was on the rise. Consumers were finding out more and more about these programs, and we've been hard at work for 12 years here at Down Payment Resource to help foster that awareness. But we also know that there's a lot of work to do. There are a lot of potential home buyers that are mortgage ready, they're income and credit qualified, probably even despite student loans in many cases, and we've got data to support that, but they don't know about low down payment mortgages like FHA, 3 or 5% down conventional, VA, USDA, 0% down, and they don't know about down payment assistance. So we want to help you guys bring awareness of those opportunities to a large pool of prospective buyers that we need to be keeping in mind and whose problems we need to be presenting solutions to. So let's just kind of break down big picture home buyer assistance. That includes down payment assistance programs, closing cost help, tax credits, affordable mortgages, and more. What are some of the universal requirements? First and foremost, these are for owner-occupant buyers. These programs are not for vacation homes. They're not for investment properties. They're not to buy an investment property and then subsequently rent that out to somebody else. They also are not just for first-time home buyers. We're going to get into that in a minute. Of course, you do have to have some minimum investment. You do typically have to attend a homebuyer education course and present that certificate of completion to your loan officer to qualify for the DPA. And of course, these aren't cash buyers, right? So the buyer has to qualify for a first mortgage. They've got to qualify for their primary financing and then supplement that with the down payment assistance program. But it's important to keep in mind, owner-occupant buyers, minimum buyer investment, attend homebuyer ed, and qualify for a first mortgage, but you don't need 20% down in order to buy a home. You can use these down payment assistance programs as a buyer to supplement your cash to close and retain some liquid money so you don't spend everything you have getting into the home and set yourself up even for a more successful long-term home ownership. Now, this is where we kind of start to break things down. So those were some basic universal requirements. We're going to break down the three most common types of home ownership programs. The first is down payment assistance. Now, I've already mentioned, and we've already sort of loosely illustrated that that can come in many forms. So DPA, DAP, if you hear those terms, it's a very broad way of describing a very diverse set of homebuyer assistance programs. We also are going to then take a look at affordable first mortgages. What does that mean? We're not just talking about an FHA loan here. We're talking about affordable first mortgage products and some unique benefits that you get with them from typically state and local housing finance agencies. So we'll show you how that works separate from just sort of the market at large, if you will. And then we want to look at mortgage credit certificates. We love mortgage credit certificates. They're a great way to provide long-term value and long-term benefit to a home buyer or homeowner. So with that, let's just get started with down payment assistance. And before we jump in here, I'm going to just remind everybody again, and Mel, let me know if we have any polls here. But enter any questions as we go. We're going to kind of get into the details here of down payment assistance programs themselves and then tax credits. But let us know if you have questions as we go. Keep this interactive. And Mel and Fern are in the background to answer your questions. But Melinda, did we have a poll we wanted to ask here?
Yes, we do have two. The first one, you want me to launch the first one, Sean?
Yeah, let's just go ahead and do both.
Okay. Give me 1 sec.
Sure. And so guys, you'll be able to you'll be able to click your answer on the screen here. And let's see, the first one, how often do you work with buyers who use a down payment assistance program? Just broadly speaking, we're not looking at timelines here, but just click your answer right there on the screen. Tell us, have you never worked with a buyer who used the DPA? Are you doing that frequently, or do you fall somewhere in between? And we'll give you a couple seconds here to click your answer on the screen. And Mel, whenever we get to critical mass here, let's go ahead and pop up the next one. All right, so we got a lot of people here who have never worked with a client that used the down payment assistance program. We will cautiously beg the question, why is that? Is it because of lack of awareness on your own part about these programs? Is it because you historically or typically have focused on luxury business or investor business? There could be a lot of reasons, right? But for those of you that frequently and sometimes work with clients who use a DPA, why is that? Is it because you have partnerships with loan officers that support and provide those programs and that know them and do them well? And for those that don't work with DPA programs, you know, we want to help you if that's a line of business you want to chase. The many tens of millions of mortgage-ready millennials across the country that just need to know about down payment. You know, we're going to cover that today. So anyway, that helps give us some context. And then we have another poll as well. And again, you can just click your answer right on the screen, and we'll take a look at the results when you're done. But I'll give Mel a moment here to pull that up.
Sean, I'm sorry. I think we just had the one. I can't get the second one to pull up. So
Yeah,
I'm sorry about that. Sorry.
So that's good. That gives us context. So for those of you, for the majority of you on this call that have never worked with a client using a down payment assistance program, we're politely begging the question, why? Because we want to help you uncover this channel, if you will. And if it's just a lack of awareness or a lack of knowledge or a lack of partnerships in place to understand these programs in order to be able to leverage them and provide that solution to your clients, then that's what we're digging into here, is to give you a basic understanding of how these down payment programs work. And then we'll wrap it up with some tools that you can use to engage in conversations confidently with incoming prospects. So let's start with the down payment assistance program. Now, this is the most common type of homebuyer assistance. As we saw earlier, the vast majority of homebuyer programs that we track and that are available across the country are typically nonprofit or government funded down payment assistance, sometimes with closing cost help, from anywhere from a couple or several thousands of dollars to tens of thousands of dollars in some markets. Now, we've said several times, these down payment assistance programs come in many forms. I want to clarify that here. So some of these are grants. A grant is a gift at closing. There is no second mortgage. There is no second lien. There is no subordinate loan. And these are all somewhat synonymous terms. A grant is a gift at closing. It's forgivable at closing. It's straight equity in the property at closing, day one, never paid back, and that's it, right? Now, if it's not a grant, then it's a subordinate loan, meaning that it's a second mortgage behind the first. The first mortgage provides for most of the purchase price. The second mortgage helps with down payment. Those can come in many forms too. And we're going to go through three here, but there are still a lot of nuances in the details there, even among these three categories. A repayable second typically would have repayment starting at the beginning. So you close and then you have a payment on the second as well as the first. That's not really the most common type of down payment assistance program, but there are some out there that do have a monthly payment. Maybe it's deferred for a little while and then monthly payments kick in. But what's more common is a silent second or a deferred second. And that's where you've got a period over which no monthly payments have to be made on the second, right? On the down payment assistance component. Of course, you always still have to pay your first mortgage. But a lot of down payment programs, down payment assistance programs, will defer the monthly payments, sometimes even for the life of the first mortgage. So until you sell or refinance or transfer title or something like that, you won't have to make a payment on the down payment assistance, and then it's just paid back when you sell or refi or do something down the road. So it gives you that upfront help, and then the provider recoups some of their money when you sell down the road. Now, also pretty common is forgivability. Some down payment assistance programs are forgivable in certain increments or after a certain number of years or time owner occupying the property, or in some cases maybe in equal increments per year over some number of years. Now, again, I'm just sort of glossing over the surface here. There's a lot of nuance and a lot of different scenarios buried in these three types of second loans, but not every DPA is a grant, but not every DPA requires repayment. There's a lot of middle ground there. Some will defer payments. Some provide for forgivability, making that loan essentially a grant if you live in the property as your owner-occupied residence long enough. And then, of course, there can be variation there. So I hope that helps kind of break down payment programs, at least broadly. But there are also some other things to consider. Obviously, all of these programs can be used for down payment help. To supplement the down payment, some of them can be used for closing costs. In fact, there are programs that are just closing cost grants. They just help cover closing costs and the buyer comes up with their own down payment. But as real estate agents, consider the value and the impact that can have, especially in a seller's market like this. If you've got a buyer who's got a closing cost grant and they're trying to compete for a property and you've got a bidding war going on, if they don't have to ask the seller to cover closing costs because they've got this closing cost grant to back them up, you can offer list price and not ask for closing costs, and you can win out over a bid that asks for list price, but they want $5,000 in closing costs paid by the seller. So keep those kinds of things in context. Also, think of a VA loan. In fact, I'll put that off for a moment. We're going to talk about veterans and maybe USDA here in a moment and talk about ways that you as real estate agents can pitch the value of a down payment assistance program to a seller, to a seller's agent, and provide unique value and a better outcome for them because they're thinking net proceeds, right? And there are ways to leverage down payment assistance programs as long as they're pitched appropriately and presented appropriately to carve out an advantage, not just for you, but for your client, the buyer. And it works both ways too. But anyway, back to eligible uses. So some of these programs can be used to cover prepaids. Some of them will be pretty specific about which closing costs they will allow and which they won't, or which closing costs they will allow their program to pay and which they won't. Some programs can be used for rehabilitation or repair of the property. For example, if it needs some repairs to be, or renovations to be brought market ready, if there's a disabled home buyer or household member and some repairs need to be done to make the home accessible, things like that. Some programs will allow you to use the money for property rehab or repair. Now, first-time homebuyer requirement. we've glossed over this so far. We want to be crystal clear. These programs are not just for first-time home buyers. Put another way, it is a myth that down payment assistance programs are only for first-time home buyers. First, what is the definition of a first-time home buyer? Put simply, someone who has not had an ownership interest in a home in 3 years. The most recent 3 years, I should be clear. So if you haven't owned a home in the last 3 years, you're a first-time home buyer. It doesn't matter whether or not the program has a first-time home buyer requirement. If you haven't owned in the last 3 years, you're defined as a first-time home buyer anyway. Now, there are exceptions woven into that for some divorce scenarios, certain title and I'm blanking on the word here, inheritance scenarios and displaced homemakers. But generally speaking, if you haven't owned a home in the last 3 years, you're a first-time home buyer. That said, there are more than a third, close to half of the programs in our system that don't even have a first-time home buyer requirement or will waive it for qualified veterans, for certain hero professions, or if you're purchasing in targeted areas. Now, those targeted areas can be all over the place. We'll talk about targeted areas in a few minutes. But we want to be clear, just because somebody is not a first-time home buyer does not mean that they cannot qualify for a down payment assistance program. That's why it's more important to keep these programs in mind as you're talking to your clients and understand where those opportunities might exist. That means repeat buyers may be eligible for down payment help. That means boomerang buyers, somebody who maybe went through short sale or foreclosure during the last mortgage crisis. If they've repaired their credit, come back around, haven't owned a home in the last 3 years, they may be eligible as a first-time home buyer for all of these programs as well. So we wanted to be clear about that. DPAs are alive and well. There's a lot of diversity in terms of the down payment assistance available, and you don't have to be a first-time home buyer to access all of these programs. Now, to be fair, there are some programs that require the buyer be a first-time buyer. So you can't currently own, you can't close on the home you own and close on the one you're buying same day, things like that, if that program has a first-time home buyer requirement. But that's not universal. So keep the doors open, keep the options on the table, and see what's out there in your market for your client. Now, I just want to walk through some terms here that you may hear in conversations or in documentation about down payment assistance programs. We mentioned earlier, some of them are grants. That's a gift at closing. There is no subordinate loan or second lien on the property. As far as down payment programs, some of them are forgivable. Some of them defer payments. Some of them will require that you live in the property for so long, or an affordability period, after which or over which that loan may be forgiven in increments or at one time at the end of that period. If you hear DAP, DPA, second lien, subordinate loan, subordinate lien, those are all basically synonymous. They all mean it wasn't a grant at closing, but it was a down payment assistance program creating a second lien and a second mortgage. Shared equity is something you might hear that's not quite as common, but there are some programs that will offer some down payment help up front, and then they will ask for, in return, when you sell the home, a portion of only the increase in equity accrued over time. We won't get into the details of that right now, but anyway, hopefully that helps kind of clarify some of the terms that you might hear. Eligibility requirements. Now, we start to get into some universal things here, like when we get to tax credits and affordable first mortgages. But most of these programs have income limits beyond which the buyer or the household may not be eligible for that program. Now, that doesn't mean these are for low income or poverty level incomes. These income limits often are 80% AMI at least. We see 120% of AMI. That's area median income, the average in the market, right? We see income limits up to 150 and 200% of area median income. That means the income limits for some of these programs can be the average in the market per HUD, or 1.5 times that, or 2 times that even. So the income limits for these programs, it depends on what's in your market. And one answer you'll hear to a lot of your questions is, well, it depends on the program. But those income limits can be very flexible, surprisingly flexible. Likewise, most of these programs have sales price limits or maximum loan amounts. Those also are typically at least or based on averages in the market, HUD's median loan or median loan limits and so forth. Those can be surprisingly flexible as well. I'll give you an example. Just because you're in the Bay Area in California doesn't mean that down payment assistance is not available for a median priced home, because the median in your market is 6, 7, 800,000, whatever it is. You guys in the Bay Area know better than I, but we're based out of Atlanta. The median here is probably low twos, right? Low 200s. That would be a median priced home. If you get into the city of Atlanta, then you'd probably see high twos, low threes. Okay, that would be the median. But the max prices here are 250 from the state. They're 400 plus from some of the in-town programs. So they match the median prices, and they then make those programs available to the median market, which is where you would expect a first-time home buyer to be purchasing, right, in that price band. Property location matters. What that tells us is if we know what state, what county, what city, what neighborhood, potentially what zip code or census tract the property is in that your client wants to buy, that tells us all of the different layers of programs potentially available to that buyer. Does the city offer a program or more? Does the county offer any DPA programs? What does the state offer? And then you have these layers of opportunity based on the location of the property. Credit, of course, that's a big factor. Minimum FICO scores typically are 620, 640, 660, depending on the program. Now that's going to vary by program, but below that, you're not going to see a lot of down payment assistance help. And in part because they still have to qualify for a first mortgage as well. So a lot of these down payment assistance programs will put a floor on FICO at 620, 640, 660, somewhere in that range. And then, of course, you still have to have a credit history and so forth to qualify for a first mortgage. But they'd be doing that anyway, right? We're just talking about adding down payment assistance to what would otherwise have been a mortgage transaction. Homeownership history, we've covered that. We've covered first-time homebuyer requirements. Obviously, that matters. It depends on the program's requirements. So I won't belabor that any further. Two other things that can make a big difference. So we're going to dig in a little further. Military service, if you've served or are actively serving in the military, that can make a big difference in terms of eligibility and the kinds of programs available to you. Likewise, working in certain professions can make a big difference in terms of which programs are available, some unique benefits and opportunities, and we'll break that down in a few minutes. But for down payment assistance, before we move on to tax credits and affordable first mortgages, what are the advantages? So yeah, you get down payment money, that's obvious, but let's break that down. What does that do? When you put down a bigger down payment, it lowers your loan to value. And if you think about the things your loan officer partners are looking at, they're looking at loan to value, qualifying ratios, and the price of mortgage insurance and interest rate and things like that. And PITI, basically, principal and interest payments, taxes, and insurance. When you use a down payment assistance program to lower the LTV, you're putting down a bigger down payment, the first mortgage loan amount goes down, the principal and interest payment goes down, the qualifying ratios improve because you just lowered the monthly payment, the monthly debt load. Sometimes the lower the loan to value or LTV, the better the rate, the better the mortgage insurance pricing. So that can compound the benefit of lowering monthly payments. It can also supplement cash to close. So if we get off the monthly payment for a moment and think about assets, we mentioned earlier, what's the benefit of a consumer spending all of the liquid money they have to get into a home and then not having a reserve fund to cover the things that they're going to have to face when a pipe leaks or they have to buy a lawnmower or all the other costs that come with ownership, plus just not having an emergency fund, right? So a down payment assistance program or even a closing cost program can help retain some of that liquid money, come into the home with a pad, with a safety net, with an emergency fund. And all of this can help increase purchasing power. When your income can help purchase or qualify for more home, when we can lower the loan amount, lower MI pricing, lower the principal and interest payments, lower the interest rate because the LTV is going down and things like that, all of that increases the purchasing power, the amount of home that buyer can buy or qualify for based on the same income. We just adjusted all the other things, right? Now, homebuyer education, we covered this earlier, but just to clarify, most of these programs do require that the buyer go through some sort of homebuyer education course, typically a HUD certified, usually about 8-hour homebuyer education course. Your client's going to learn a lot. They're going to be a better educated client for you. They're going to be better educated about not just the home buying process, but also what successful long-term home ownership looks like. Now, before the pandemic, before COVID, there were already plenty of really good online homebuyer education options that would qualify, that HUD approved and would qualify folks for a down payment program. We love the idea of homebuyer education because it isn't just preparing buyers, your clients, it's preparing successful owners long term. So reduction in default rates. There's a lot of data that suggests attending a homebuyer education course prior to purchasing or closing on your home also contributes to reduced default rates long term, reduced risk of foreclosure. That's important, right? That's important for a healthy economy and a healthy industry. So we love homebuyer education, typically required. The last comment I'll make about that is keep that in mind as you use a down payment program, because what we don't want is for everybody to wait or forget that that class has to be done, and then you're a week out from closing and there's a scramble to get it done and potential for a delay. Do that class up front. Get pre-qualified, get your client pre-qualified, figure out which down payment program they're going to use, and make sure they start the right homebuyer education course up front to prevent delay, but also to kickstart that education process for your client. Now, that was just down payment assistance programs, and we said we were going to break down 2 of the other most common types of homebuyer assistance. The next one is the affordable first mortgage. Now, we're not just going to sit here and talk about Fannie, Freddie, HUD. We're going to talk about the benefits of typically the mortgage products offered by state housing finance agencies in conjunction with their down payment assistance programs that can leverage other benefits and produce value for your buyer. One of the most common is reduced interest rates. Now, the bond market and the secondary market have been somewhat volatile. And now I think most of that has subsided, but bond rates are really good right now. So you've probably heard the term bond program. Maybe if you haven't done a DPA in a while, maybe in a long while, and you're used to the idea of a bond program, they're not going to run out of money anymore like you might be used to 10, 15, 20 years ago. They're essentially perpetually funded. But bond rates are so good right now that a lot of buyers and the professionals helping them are going to their state housing finance agency to get the bond rate on the first mortgage because the interest rates are so good, even if they don't use the down payment assistance. It can expand your first mortgage options. Housing finance agencies are able to provide programs and product and pricing options that the market at large cannot always provide. Some of those options include reduced mortgage insurance costs, reduced interest rates, obviously combining with down payment assistance, but most mortgage credit certificates also come from state housing or local housing finance agencies. So there is the possibility of getting a good mortgage, maybe some down payment assistance, and potentially a mortgage credit certificate. We're going to get into MCCs later, but those are just broadly speaking some of the unique features that these affordable first mortgage products from HFAs can come from, HFA being Housing Finance Authority. Some of the advantages, again, we're reducing the buying costs. We talked about lowering LTV and principal and interest payments and improving qualifying ratios with a down payment program. Well, think about some of the rates of these affordable first mortgage products. Better interest rates, better mortgage insurance pricing, reduced mortgage insurance costs. Those have the same benefit of reducing buying costs, lowering monthly payments, which then increases or improves qualifying ratios, and increasing the purchasing power of that same income. So if we can adjust any of those other things and we don't have to adjust income, the income is what it is, we can increase the purchasing power by leveraging the benefits of some of these programs. And all of those things, as we mentioned at the outset, can help expedite home ownership. These are the kinds of conversations that can help bring people into your pipeline that weren't reacting to your marketing, weren't answering your calls, weren't replying to your emails. But if we get the message in front of them that, hey, if down payment is your obstacle, you shouldn't be waiting. You should be talking. Let's talk and start that conversation. Explore these options and see where they lie, see where they stand, right? All right, now let's look at mortgage credit certificates. And then we're going to get into some other kind of unique scenarios, opportunities for you guys to add value and to carve out a little bit of expertise with maybe some specific referral channels and so forth. But let's first break down the third most common type of homebuyer assistance, which is the mortgage credit certificate. This is a tax credit, a federal income tax credit. Now, to be clear, that's different from a tax deduction. For those of you that are homeowners or that talk about this with your clients, once they get into a home, they're going to claim a mortgage interest deduction, right? And that's just reducing your taxable income by the amount of your mortgage interest paid. Now, of course, that mortgage interest deductions have been changing over the last few years. There's always talk about change, further change. But think about this. A tax credit is not reducing your taxable income. A tax credit is reducing your tax bill, your tax liability. Now, we're not tax planners here. We're not getting into tax law. We're not financial advisors. So I'm gonna keep this surface level. But a mortgage credit certificate allows you to claim some percent of your mortgage interest paid as a tax credit and knock that off your tax bill, and then claim the rest of the interest you pay in that year as a mortgage interest deduction. A tax credit is always more beneficial and preferred over a deduction, typically, I would think. A mortgage credit certificate is good every year for the life of the loan. So long as they stay in that mortgage, in that property, they get to claim this mortgage credit certificate every year. So this is not at closing, right? They're not getting help at closing, but they're getting long-term, life of loan tax credit value every year they file their federal income taxes, and they still, after the credit, they get to claim the rest of their mortgage interest paid as a deduction. So it helps offset mortgage interest cost. Now, what are the benefits? Obviously, reduced income tax liability. You're lowering the actual tax bill directly, dollar for dollar. You can, in some cases, increase qualifying income. Some MCC mortgage credit certificate providers will allow you to take the end of year tax credit, estimated tax credit, and apply that back annualized to their qualifying income, increasing their qualifying income. Not all of them, but some of them. You can also, in some cases, reissue that mortgage credit certificate through a refinance if going through that same housing finance agency. So that's important because it extends the life of the mortgage credit certificate, and it re-ups when you re-up your amortization schedule. Now, we don't want to get too heady with the math or anything. So here's just one quick example to try to simplify the math. $200,000 home, 4% interest rate. You can tell we did this a while ago, right? But anyway, that's $8,000 in interest paid in year one. Now, every MCC allows you to claim a different percentage of the mortgage interest paid as a credit. 25 would be pretty standard. So let's say you can claim up to 25% of the mortgage interest paid as a tax credit. That gets you to a $2,000 credit, which is actually the cap in most cases. But that $2,000 credit is a direct reduction of your tax bill. The remaining $6,000 in interest that you paid in that year then still can be claimed as your standard itemized mortgage interest deduction. So that's far and away a better benefit than just the deduction on its own. Also, if we were to change tax deduction rules over the next 2, 5, 7, 10 years, this MCC life of loan is going to be a game changer and a big deal and a huge value for those people that get them. One last comment on MCCs: you cannot get one retroactively. Just like down payment assistance, you can't go back a month after closing, find out that a mortgage credit certificate was available, and go apply for it. You have to apply pre-close, get approved with your mortgage, close, and then you own it life of loan. So keep that in mind. Now, I'll just one more reminder here, ask everybody, if you have questions, Melinda and Fern are in the background answering questions. So keep them busy. If you've got stories to tell, if you've got testimonials, if you've got ideas, comments, feedback, whatever, keep it interactive. Now, let's look back kind of universally across all of these things we've just talked about. What are some of the unique features, the unique benefits? What are the things that differ among some of these programs? And where are there perhaps some unique opportunities for you to step into a prospect pool and say, hey, I've got this, or I know this, or this is available. Here's what we can do with it. We can make you a homeowner with it. Now, targeted areas. A lot of people might say it's too expensive to buy in my market, especially the closer into the metro area. In many markets, the more expensive the homes, and that can price out a lot of first responders, educators, healthcare workers, and so forth, core service providers that might otherwise prefer to live where they work or closer to where they work, cut down commute times and lifestyle costs and so forth. In targeted areas, which can be defined sometimes by census tract, by zip code, it could be entire cities within city limits, it could be entire counties, it depends. But they're typically areas that have been identified by the DPA provider as high foreclosure, in need of redevelopment, low owner occupancy rates, or for whatever number of reasons, the down payment providers want to inject home ownership, owner occupancy into that market, and will incentivize that, often by waiving any first-time home buyer requirement. So a program may require that you be a first-time buyer, but waive that if you purchase in one of their designated targeted areas. They may also often, it would be common to see more down payment assistance money available in those targeted areas. It is also very common to see higher income limits and higher sales prices in targeted areas than in the rest of the market at large. The idea is incentivize owner-occupant home ownership in those markets and enable core service providers and others to cut down commute time, live where they work, and provide incentives in order to do so. Targeted professions. I mentioned this earlier and said we were going to come back to it. Think about educators I'll come back to that. So some of the targeted professions for whom we commonly see unique programs or unique benefits that the general public may not have access to, like a first-time home buyer waiver, like additional DPA money. Those are the kinds of things that in some markets where these programs exist, there may be for people who are educators, people who are in law enforcement or first responders, municipal employees, people in the healthcare profession. And I'm rattling off kind of the most common here, but I also want to cover the definition. So let's just say a teacher program. That may not just include K-12 classroom teachers. There are plenty of teacher programs where they exist that actually are for faculty and staff subject to income limits. You don't actually have to be a teacher. You could be a librarian. You could be a custodian. You could be a parapro. You could be front office staff. You don't necessarily have to be a classroom teacher in order to qualify for an educator's program. Similar with, let's say, law enforcement. You may not have to be a police officer to qualify for a police program. They may open it up to office staff, supporting staff, Department of Corrections, sheriff's deputies, police, fire, EMT, and so forth. It depends on the program, but the point is, for healthcare programs, for nurse programs, you may not just have to be a nurse. You could be any number of technicians, office staff, billing staff, receptionists. Sometimes it's about the profession or the industry that you're employed in, not the specific job title. So those are important to remember too. If you live in a big military market, that's also something to consider. So if you work with or have the opportunity to work with a lot of veterans, if you find that you're working with a lot of veterans and your loan officer partners and you are doing VA loans, there may be down payment programs that don't require a first-time home buyer or don't have a first-time home buyer requirement. But we often hear this, and so we want to address this. And think of the same for USDA if the property is eligible. For a veteran, if they qualify for a VA loan, it's absolutely true that they could get a 100% LTV loan and they don't have to come up with any down payment. Sure. What is wrong with offering that veteran equity, especially in thanks for their service? So think about this. What great value to be able to provide down payment help for a few $1,000s Maybe it's a grant. I'm going to give you an example here in a moment. Provide them with some down payment help for a few $1,000s up front. They can still use that VA loan. And then they go into the house with no down payment required, but they had one and they used it, and now they've got equity in the house right off the bat. Or likewise, sure, they don't need a down payment. A veteran, qualified veteran using 100% VA loan does not need a down payment. Okay, but they still have closing costs. Like anybody else, they're going to have closing costs they have to cover. They can ask the seller, and the seller can cover that. Or you could go in with no down payment, have a closing cost program that covers the closing costs, offer the seller a competitive price, not ask for closing cost help from the seller, and you just positioned your veteran client as a better offer and a better deal for the seller than perhaps some of the bids they're going to be competing against. I'll give you an example of a program just for those that are either active duty, reserve guard, or veteran. The PenFed Foundation has a Dream Makers grant. That's the name of their program. It's a 2-to-1 match. For every dollar up to $2,500 that the veteran puts into the transaction, PenFed Foundation will match it 2-to-1 as a grant at closing to be used for down payment or closing costs. Now, they've got income and purchase price limits, but, and I think you do have to be a first-time home buyer for that particular program, but that's a grant at closing. If they put in $2,500 of their own money and PenFed matches it, that's another $5,000. That's $7,500 to be used for closing costs or down payment. And that's a great position for you to have put that veteran in order to get into a home. And it's a competitive advantage when you go bid on properties. All right, now, a couple other things. How can we help you access all of this information? We've given you a ton of information here. So how can we help you access this? How can we help you not just start, but continue these conversations with confidence? You can go to downpaymentresource.com. You can do a search for programs in any of these scenarios we talked about today, all over the country. These programs are everywhere. So at the very least, you can go to downpaymentresource.com, do a search, figure out some programs that are available in your market, and start talking about them with clients. If you are in California, you can go to downpayment.car.org. You've got a widget there that gives you even more detail about these programs. You can also access some additional marketing content and ideas that we've collaborated with CAR to produce for you. And you can send your clients to finddownpayment.car.org. Now, those are only for searches in California. So for you CAR members, you can use that tool, get some more data, get some more insight into these programs. Here are our MLS partners. If your MLS is listed on this screen, you have access to down payment assistance program data on listing reports inside your listing system, on agent reports, single line and detail, on client reports in the client portal. And so your clients can see these programs as well. There will be a down payment icon like one of these on eligible listings. Look for that in your MLS system. Click it. We show you which programs are out there. Now, for our MLS partners, let me back up again to this list. You don't have to pay anything for any of these tools and services. This is part of our partnership with your MLS, and we intend to grow this list. But if you see your MLS listed here, if you're a member, you have all of our down payment resource tools, including Down Payment Connect, for free. Now, I don't think we have a lot of loan officers with us today. We were focused on real estate agents. But if your MLS was not listed there, Down Payment Connect allows you to generate leads, supplement your marketing with a lead generation tool. So we give you a way for consumers to search for down payment programs in your market, connect back to you and only you to continue that conversation and learn more. And you get to learn more about them, where they want to buy, and the down payment programs they came up with. You can look into Down Payment Connect at downpaymentresource.com/DPC. But again, if your MLS is a partner with us, you don't need to do that either, because you also have Down Payment Connect as part of that package. Now, Down Payment Connect gives you your own lead generating landing page. It allows you to capture more referrals and leads. So when you're out there on social media, marketing, talk about down payments, give them your Down Payment Connect link, let them search, generate that lead for yourself, and start that conversation. You can include it in your email signature, on your website. In fact, we have a webinar that we do every other month. So that next month's webinar from us is kind of our standard rolling agenda. is all about Down Payment Connect and creative use cases, peer reviews, seeing what your peers are doing and so forth. We would also encourage all of you, wherever you are in the country, to join now almost 7,000 down payment insiders in our Down Payment Insiders Facebook group. Melinda and our marketing team are keeping them engaged and interactive. They share, these are real estate agents all over the country, sharing stories about working with first-time home buyers, DPA programs, their lender partners, marketing obstacles and challenges, how they overcame them, success stories, and so forth. It's a great way to step in and learn, step in and hear from others that are working with first-time home buyers that are using DPA programs, and carve out your strategy. Lastly, we'll leave you with, before we get into Q&A, leverage the experts. Talk to your loan officer partners or use DPR to figure out who the participating lenders are in a given program. Leverage their expertise. They'll help you set contract expectations, timelines, and get buyers pre-qualified, understand all the DPAs in your market. But the other expert to leverage are the providers of these down payment programs. So let people know which programs are available in your market. Let them know what the benefits are. Include that information in your marketing and leverage the opportunities that we've presented you with today. So with that, if you have to go, thanks for joining. We still have a huge audience here. We're going to go ahead and get into Q&A. And Fern, Melinda, what's going on in the chat? Any trends we can address?
Yeah, Sean, lots of great questions today. A few questions that we are seeing a few times. The first one is, are the down payment programs stackable?
They are. Stackable or layering is another way you might hear that. A lot of state housing finance agencies will layer their programs with some of the local city or county or nonprofit programs. It does depend on the program, and you're going to hear that a lot in answer to some of these questions. When we say leverage your experts, make sure you're working with your loan officers to understand which programs are out there, but also when you do stack or layer DPAs, the buyer has to meet the qualifications of all of them. So if one is more restrictive than the others, that's the set of qualifications they're going to have to meet. What else?
Great, thanks, Sean. Another question that we're seeing is, how do I find a list of participating lenders?
So there's several ways. If you go to downpaymentresource.com and you do a search, then in the results, you can learn more about any program that comes up in your search results. And the first thing we show you are who the participating lenders are as published on the program provider's website. So it might be a link to a PDF, it might be a link to a web page or a widget that you can use to plug in a county. You can also, if you are a member of one of our partner MLSs, then when you're looking at down payment information from listings inside your MLS, then you can click on the listing, see the DPAs, learn more about details there. Again, starting with who the participating lenders are. I'll also add to that, though, a great place to start is call the loan officers that you already know and that you already work with. It may be that this topic hasn't come up. It's certainly worth reaching out to them and asking which programs they participate in and what's their plan, their strategy to support you and the clients you might bring them if you were to partner up with them.
Great, thanks, Sean. Another question that we are seeing is, are these programs available for investors as a second home purchase or a vacation home?
Nope. Owner occupied, primary residence only. Residential.
Great, thank you, Sean. Mel, I'll throw it over to you now. I know you've been monitoring the chat box. So are there any questions that you're seeing that are coming up?
Yeah, we actually had several questions, Sean, about, and you kind of just answered it, but if you don't mind going over it again, whether these programs are available for land deals. So if they have vacant land, can they get down payment, or they want to buy vacant land, can they get down payment assistance for that? Or if they want to build a home on vacant land, can they get assistance for that?
Some programs will allow their down payment funds to be used for new construction at the time of completion, but not for the construction and not for the acquisition of land.
Okay, thanks, Sean. And I also just want to reiterate to everyone, because a lot of it's come in recently. We are recording this webinar, and we will send out a recording after the session to all registrants, so everybody will receive a copy of that. And then I also, Fern, had your question about how to find loan officers. A lot of people looking for loan officers that work with programs and kind of frustrated that loan officers don't work with programs more often. So I'm glad we spoke to that. And other than that, I have had a lot of specific questions about qualifying, their buyers qualifying. So I've just been kind of trying to answer that, letting them know they can search for programs on our site, talking to their loan officer. I haven't seen a trend otherwise. So if you just want to start going through the Q&A panel and reading what they have, they're still coming in. So Fern and I are still answering, and everybody still send your questions and we're here to answer.
Yeah, one question that I'm looking at now is my lender says that DPA programs cost the buyer more money. Is this true?
So that's a good question. Some DPAs are funded through interest rate. It's called premium pricing. It's a pretty standard practice. A lot of state and local housing finance agencies do it. You might see a 1/4 point increase in rate, and that funds the down payment assistance. So yeah, that's not uncommon. That is true. That is one business model or one model of funding a down payment assistance program. Let's see. I see someone. Let's see. If a certain bank is qualified, are all the loan officers qualified? That's actually a good question. So we mentioned how to find the lenders, the brands, the companies that participate, but that doesn't mean that every loan officer uses that same program or is as familiar as some other LOs. So it is important to talk to the loan officer and see which programs they are familiar with themselves. And while the company may be a participating or approved company, the individual loan officers in some cases may have to go through a training, or they just may not be familiar with it. Let's see, can we use the link for our personal landing page in our email signature? Yes, absolutely, Wilma, that's a great idea. And you can certainly do that, plus social media, plus your website, and so on and so forth. Get creative with it. Can funds be used to purchase points? Cheryl, not usually. It's going to depend on the program, but typically they're going to stay away from funding discount points, and they're going to cover down payment and some sort of standard closing costs. Is there a universal first-time certificate for first-time homebuyer programs for different counties, or you have to take a course for each county? Typically, the course you take would qualify you. I mean, if you take a course from an approved homebuyer education provider, it's probably good in that state, and it's probably good for 6 months to a year, maybe even longer. Let's see. If you're using a down payment program, will it cost more? Okay, if using the down payment program will cost more, how does it really benefit the buyer? Upfront down payment. If that's the obstacle preventing them from closing on a home and they have to have the down payment, they could wait 6 months, a year, 2, 3 years and save their money, but rates may go up. The prices of properties are going to go up. If their income doesn't go up equivalently, they're going to face more expensive home purchase down the road. They're also spending more in rent than they may be spending on purchasing a home. So even if, in the premium pricing example, even if the down payment is absorbed by the rate, they may still be better off now than the cost of renting. They're going to be in the home building equity, paying down a mortgage, and maybe it costs a little bit more to get to that point in terms of the interest rate, but rates are so low now that, and that's not why people do premium pricing, but rates are so low now that it's almost hard to avoid at least exploring that opportunity. Let's see. This is great, guys. Keep it coming. We got a few more minutes here. My loan officer says I find my loan officer says I find the home the buyers want first before applying for a DPA. That actually, Samantha, that depends on the program. Some programs actually want a signed contract before they will final approve an applicant for the down payment assistance program. Some programs, however, won't let you sign a contract, or they won't qualify you for the DPA if you've signed a contract. They want you to qualify for the DPA first and then go out and search for a home. I realize there's some conflict there. Each DPA program and provider treats that differently, and it really does depend on the program, which is, again, why it's so important to be working with both the program providers as well as your lending partners. Can a buyer use both the DPA and closing cost grants at the same time? Sure. It depends. If you're talking about layering two different programs, that's certainly possible. Some programs allow you to use their money for both down payment and or closing costs. So yes, layering is certainly a possibility. Many programs themselves might let you use the money for more than one purpose. Let's see. I'm gonna look in chat here. Let's see, if I were, I need to rehab costs, is there plans for, okay, so Michael's asking if I were buying in the wedge or below market value and needed rehab costs, is there plans or loans for rehab costs? Yeah, Michael, there's not a lot out there, but we did bring that up because there are some programs that will allow the funds to be used to renovate or rehab or repair the property being purchased. Obviously that's going to take a little longer to close, but they'll be just like doing a 203K renovation loan or something. There are some programs in some markets that will allow for that, especially when it's for example, a disabled home buyer or a family with a disabled household member. There are some programs out there that fund accessibility improvements. A lot of that came from neighborhood stabilization program funds. A lot of those are kind of gone away. They twilighted. It was kind of a one-time deal several years ago. But yes, there are still some programs around that do that. Let's see. When using the link, how does the buyer indicate multiple cities they are looking for a home in? Delana, the answer is to do multiple searches. So we have to have one location in order to produce a set of down payment programs that may be available. They can certainly do more than one search, but in a single search, they can only look for programs in one area. Otherwise, we wouldn't know, if you said two different cities and they're also in two different counties, and that could just get complicated, plus longer lists of programs. Let's see, what are the steps someone should take to get into a home using DPR? Do they need a home in mind first? No, we would say, Myra, go talk to your real estate partner, go talk to their lending partner, get pre-qualified, figure out what the down payment gap or obstacle is, figure out which programs and solutions exist, what is the right mortgage product, and then get all that worked out, maybe even do the homebuyer education course, and then, or as they do the homebuyer education course with a pre-qual letter in hand, then go start looking for a home. So if they're already looking for a home with you, now's the time to start this conversation. But a great way to cultivate more people would be, let's talk about down payment, because that may be the idea or notion that's holding people back from talking to you. But if you can prevent all this as a solution, a potential solution, then you could be cultivating the next quarter's pipeline right now by opening up dialogue about the down payment programs that are out there. Let's see. Let's see, we answered this about certain loan officers. I'm kind of running out of stuff in here. Let's see. Do you have this course in Spanish? Wilma, we don't yet have, so there's a couple answers. Our website itself is not translated into Spanish, but we do have some flyers for realtors, static content that you can add your custom contact info to. We do have some customizable flyers already translated in Spanish. We got a lot of graphic options there. We also know that some of the homebuyer education course providers are either in the process of or have already translated into Spanish. So that's for the actual homebuyer education course for your buyer. What we're doing today is just a webinar for real estate agents to learn about these programs. So this isn't like a CE course or a homebuyer ed course, but increasingly you're going to see more and more content translated into Spanish. Jennifer asked a good question. Do you run the risk of no funds being available if you wait to apply once you find a property? Sort of, potentially. And again, it depends on the programs in the market. When you get to like the cities and the counties and the local nonprofits, that's where you see some seasonality in the funding. They may get funds, one pot of money up front at the beginning of the year, and that's going to last until they've expended it through all the down payment transactions that they've been able to help people with. Now, when you talk about a state housing finance agency, no, they generally don't run out of money. So that option is always on the table. So it does depend on the program. But yeah, if there's a great city program and they just got their funds, it'd be a good time to start lining up the finances. Or like I said earlier, start getting those prospects in now, getting them pre-qualified and lining up the finances so they are ready to strike and be competitive once they have a property in mind. But I wouldn't wait around for one down payment program because there are so many out there. Let's see. We'll answer a couple more here, and then we still got a pretty big audience. We've got a lot of people sticking around, but we're already 10 minutes over here. Let's see. I'm going to hop in chat here. Fern or Mel?
Hey, yeah, Sean, if you don't mind, will you show our partners page again and just go over how they, can differentiate, how they can find us if their MLS is a partner, how they can find us and what resources they have available?
Yeah, sure. So here are our DPR MLS partners. If you are a member of one of these MLSs, you already have access to a very robust suite of down payment tools, including links that look like this on listings in your MLS when either you're looking as an agent at the agent single line or agent detail reports. It's called something different in most MLSs, but basically it's your single line or your agent detail, listing detail reports. Your clients will also see this in your client portal. So if you're sending them listings from the MLS or they're set up on auto emailers, they can see a button like this. If you or your clients click that, you'll see down payment assistance program details unique to that property. And your clients can then add some household information if they wish to cater it to their home ownership history, household size, military background, and so forth. So again, here's the list. If your MLS is on here, you already have all that. You also already have Down Payment Connect if you're a member of one of these MLSs. Now, Down Payment Connect is a lead gen tool. You get your personalized lead generating landing page. You use that in your marketing. You can drive as many people as you want to that page. It's yours. You can generate all the leads you want from that page. Basically, a buyer goes there and they search for home buyer programs. It works in your state or your market, market-wide. They can figure out that there are programs out there, reach out to you through the lead gen contact form to learn more. There's no carousel. We don't do anything with those leads. They're yours, okay? And then if you're not a member of one of those partner MLSs, you can still go to downpaymentresource.com/DPC, and you can subscribe to the Down Payment Connect tool to give you that marketing and lead generation capability that you can take to your social media, your email signature, your website, and so on and so forth. So Mel, Fern, any other last topics here? And I'll leave everybody with their contact info if they have any other questions after the webinar.
Go ahead, Fern.
I was just going to say, I think from my perspective, I think you've pretty much covered everything. But Mel, you may have seen something else in chat.
No, I didn't. I was going to say the same. Sean, great job. I think you covered everything, and we'll include the recording in the follow-up. And just to answer, I did get a couple of questions in the end. This recording will include this Q&A session. So the questions and answers will be in the recording as well.
Yep, and guys, sorry if we didn't get to everything. We still have questions and comments pouring in. But to be mindful of your time, we went over about 15 minutes. So we'll let you guys get back to your business. Reach out to us at info@downpaymentresource.com if you have any further questions, and we'll be happy to help that way. All right, thanks a lot. Have a good day, guys.